moving on, let's check out the next strategy, which is called Meteora DLMM microstructure analysis from Max.
Hi, everyone. In this video, I will present my Meteora, the DLMM microstructure analysis notebook. This is something I built leveraging the QuantLab framework within the Hummingbot product. But before we dive deeper into the notebook structure and what it does, let me please briefly explain what is the goal of this research pipeline. The goal basically of this notebook is threefold. First of all, I want to analyze using public API endpoints. I want to do an exploratory work of the different pools present on the Meteora platform. The second aspect, I built as well a snippet within the notebook where basically traders can simulate the impact of their swap trades on different pools and also assessing what is the slippage they're going to have and what is the best or optimal liquidity pool for their trade. So in reality, this is the second point. The third point, which I think is the core of the snippet, I want to analyze microstructure patterns across different pools and different cryptocurrency pairs to identify liquidity distribution anomalies, concentration risks, and potential for market manipulation signals. This notebook intends to have three key use cases. First of all, it's going to help liquidity provision, giving kind of an optimal window of price or range of prices where market makers can optimize their fee collection, seeking for ranges which are less exploited by other market makers. The second use case of this notebook is to detect anomalies and manipulation risks. So it identifies liquidity distribution anomalies and potential market manipulation signals, enabling a proactive risk management because it can help basically market makers to understand if it's very concentrated or there are risks of manipulation or there is a risk of a rug pull potentially. And the third use case is to test potentially with this framework high frequency strategies. So it provides a framework to quickly test the high frequency trading strategies, offering kind of a simple initial feedback on whether the order placement the algorithm use is easily detectable by statistical algorithms. And if you want to go stealth in the way you trade the markets, this can be a framework can be used for that purpose. But let's jump in and let's dive deeper into our notebook. So the notebook is structured, as said, in different parts. There are different cells and different snippets. So the first part is going to basically give you an overview of the Meteora dynamic liquid market making pools. And the second part we will show, so this is really the setup configuration, where basically you establish, you import your libraries, you load environment variables, and it sets up the scene for further analysis. And when this runs correctly, it's going to tell you what is the network, what is the gateway URL, and basically it loads the Telegram bot token and the chat ID. Because at the end, as we will see, there is going to be a connection to Telegram to really post and send periodically this report that is not produces. The second part is more a Meteora pool discovery. So here we set a threshold in terms of minimum liquidity that the pool should have. And we set up top 10. So we analyze basically 10 of the largest pools, but this can be configured by the notebook user to fit their needs. And here the output of this is going to be more general statistics about the protocol. So it's going to give you kind of the total TVL for top pools, total volume for the last 24 hours, fees, average API, the number of active pools, and also the capital efficiency with regards to the daily turnover and part. Then, using as well more public API endpoints, we analyze more pool groups by bin step strategy, building a bin step strategy guide. And the output of this is going to be basically comparing different bin layout and setup for different tokens. So it helps basically guide through what are the different pools available for the top tokens or the tokens that the user of this notebook is interested in. Then if we jump into the following, Here also we plot some distribution analysis, really high level. Here we're going to basically display what is the TVL distribution across different liquidity pool size. We're going to also see the distribution over the last 24 hours in terms of volumes. As you can see, basically the liquidity in terms of volumes and TVL is mostly concentrated in just a bunch of calls, as one would expect. And there is also a report with regards to the APY distribution. And with that, it comes as well a quick summary of the main findings of these snippets. The third part is going to be about basically tracking the liquidity provision movement patterns. And the goal here is to try to understand if there are big migration in terms of TVL across main liquidity pools. And it can be very interesting to understand this dynamic because from one side, the big growth in TVL may basically be a signal of increasing returns in terms of liquidity provision, but also can be a warning sign if TVL gets depleted very quickly, that the pool may not be as attractive as it used to be. And these snippets as well produces some charts explaining, in this example, Trump token versus USDC, this pool in terms of Sol USDC, and another high APY Momo Sol in terms of TVL development over the last set of days. Here I've been setting it to 90 days, but this can be configured to a different time window. They may suit the user. This part is about swap analysis. And here is about finding the optimal tool for your trade size. And the output of this snippet is going to show what are basically the best pulls given a certain size. And also is going to show as well what would be the impact in terms of slippage trading across these specific liquidity pools. Again, in the next cell, we dive a bit deeper again in TVL migration analysis, and here is about fees. So here we try to answer the question, are these APY sustainable and how have they been evolving over time? As we can see quickly in the outputs, probably the chart is the best way. It's going to show, in this case, for two USDC pools with different bin size, what has been the fee history over a certain time window. On the right-hand side, it shows the fee distribution, the box plot, how the dynamic liquidity provision has worked in terms of fees. And this is one important aspect to capture because the dynamic liquidity provision of Meteora, different from, for example, from Radium or from Uniswap you may be used to. Basically here, the fees are dynamic and they depend on the volatility of the underlying asset. So it's interesting to see as well how the fees have changed in the recent past and what has been their distribution in different volatility regimes. And again, we plot different APY scenarios and also the volatility of the fee, as we can see in the last few days, as the volatility in the market has picked up as well. The volatility of the fees has followed suit. This is probably the most interesting part. Now we jump in, and here we analyze the liquidity bins. Here we use more the gateway framework to get this data, which is not easily available directly through public endpoints. But Gateway gives a deep dive, a good and a granular analysis of the liquidity provided across different bins of price ranges, if you like. This is an example how the chart will look like. For example, for Sol USDC, for a certain bin size, and while the yellow dotted line shows what is the current price, on the left-hand side, on the right-hand side, you can see what is the current liquidity provision size in dollars per each, basically liquidity bin, which can be interesting if you want to find an optimal range where to place liquidity. Like, for example, in this example, we can see the liquidity is highly concentrated around the current price, but you can find basically other area of price where basically you can optimize potentially your collection of fees. Let's then maybe go quickly over this and let's take a closer look basically at the core engine of this notebook. And basically I believe this is the main added value of this notebook. So first of all, as said, we're going to plot a heat map of what is the liquidity distribution using Gateway data for the top 10 tokens. You can fine tune these, you can change to different pairs to create this heat map. This is going to help you to see where currently liquidity is sitting and where basically market makers are mostly active. And then coming to the final point of our research is more the liquidity manipulation detection framework. Here, Notebook uses 10 statistical metrics that help identify manipulation risk or certain imbalances that may exist in the pool of Meteora. And these are the Shannon entropy, where basically we try to understand the disorder present in the liquidity pool, the Gini coefficient, which is going to be an indication of high or low concentration or liquidity provision in the pool. Then the third element is the Herfindahl-Hirschman index, where we analyze the market power concentration. We have a moment analysis to understand how order or natural, if you like, the liquidity pool distribution is, and how can be actually too perfect, meaning that probably there is high coordination across potential liquidity providers, can be a warning sign, basically, of risks for the strategy. Then we have bimodality coefficient. Here we try to understand if we have two-sided wall detection of price. We analyze as well the autocorrelation, so the spatial periodicity patterns, to see if there are many bots that are managing liquidity in the specific pool, or if it is more, if we like, also manual work behind it, and if there are many uncoordinated or coordinated market makers present in this pool. The clustering analysis is going to provide an idea if there is a pocket concentration of liquidity. And then last but not least, the last three statistics that we use is the permutation entropy, which is analyzing the ordinal patterns present in the pool. We have the Welch spectral analysis and the Jensen-Shannon diversion for baseline comparison. Then we put together these indicators to basically provide a report across the main pools analyzed to understand if it is more of a random, natural, if you like, pool, if there are more two-sided walls, or if there are many bots present, or where there is a clear whale dominance. And across the top 10 pools of Meteora, we see that there is definitely a lot of whale dominance in certain parts, and there are many bots active, if you like. But the main goal basically is to provide more of a report across the main pools and give kind of a deep dive into the microstructure of the different pools. It may help you basically then from here optimize your liquidity provision strategy. At the end, we have the Telegram notification. This is something similar already built in QuantLab, but can be very helpful to have this report automatized and sent regularly. In this case, we set up an hour on Telegram to have kind of a warning and the report at hand to then trade from there. Hope you enjoyed this presentation, and if you want more data about it, I also presented and added some slides explaining more in detail the statistics and the methods used by this microstructure analysis notebook. Hope you enjoy, and please feel free to take a look at the code and take a look at the basically presentation that is accompanying this notebook. Thank you.